Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free video report for Wednesday, October 12th, 2016. So we're getting some pretty good volatility going in the market, and that is what everybody wants. Just to where things make sense instead of a grind up and nobody really knows why it's going up or it's going down. When you have volatility, things work and they make sense, and hopefully you guys have been taking advantage of it. But we've had some really good trades, especially this week and things, and everybody's looking for the big moves, and as you can see, Woody has predicted all these, but sometimes the markets are going to be boring, and that is something that we've been preaching for really the last month or so. Is listen, holding out for the big move right now. It's been a losing trade because we're seeing these big moves that are they're getting gapped up the next day or gapped down the next day, and we're seeing a lot of point movement, but we're not really going that far. So the big moves, they'll be here again, but right now we're just in really these chop sections. This is an older chart I'm just showing you here. We're in these chop sessions, and that's where when you have a nice profit, you take it. Even look long, and you just you don't look for the home run. You take the 30, 40, 50 S&P points and you move on and wait for the next trade. So at Sentiment Timing, we believe that human beings and the markets are irrational, and there's always going to be an irrational element at work, and that is what creates market opportunities. Now, we identify these irrational elements through time, sentiment, and price. So time is when to expect the reversal in trend, and that's, in my eyes, probably one of the most important pieces of the puzzle. Because if you don't know when the market is set to reverse, how can you try to predict where it's going to reverse? And one of the things that I found way back when I started following Woody was that when I knew the timepiece, for me to chart and figure out where it may turn was a lot easier, because if I was doing an Elliott wave count or Fibonacci retracements or bullish or bearish divergences, if I didn't know when to expect a low or a high, all of that stuff is thrown out the window. Because if you see a big move that takes place and then the next day you get a bounce and you're thinking that's the low, but unfortunately, the timepiece isn't supposed to be looking for a low for another 10 to 14 days. So that when you get that bounce, all you want to do is short it and keep doing that until we get to the time period where you're expecting a reversal, and then you look to switch sides. And it's, vice versa. It's not just on the downside. You can look to buy. But from there, sentiment is always going to be, at an extreme, at a low and a high. And what I mean by that is you're always going to see a 90, anywhere in the 90% bullish when we're about to be making a top. And you're always going to get really, really low sentiment when we're about to make a bottom, and I'll go over all that. And the price part, when you have these two pieces here, now you're just trying to figure out where's the turn going to take place, and that's how really everything works. And there's nobody in the entire world that does what we do, just because of the sentiment aspect of it. I know there's a lot of there's maybe a handful of services that does time and price. But when you add the sentiment into it, it makes it one of the most unique, really services in the world. So the whole point of following sentiment is that, when everybody is into euphoria and every newsletter and every financial news station is saying to buy because we're heading up to whatever level, usually that's when it stalls and you want to start looking on the short side. And if you want to trade like an institution, when you get into the thrill side, you cover your longs and you start shorting up here. Then when you get into the panic, you cover your shorts and you start buying, and you're buying, you're selling at the top and you're buying at the bottom, and you, this part of it, when it, these cycles repeat over and over, and that's really how they do it, and that's what I do, and what I've been really preaching to anybody that's been following us is, when it's up here, even if the timepiece may be off by a couple of days here and there, price usually doesn't really extend too much more when you have sentiment that's at a that is an extreme bullish level, and the same thing is vice versa when there's a low being made. If everybody's bearish on the market, there's a bottom that's going to be coming real soon. So this was on September 20th. Let's go to the timepiece. So on September 20th, what he had said was that he was watching a pattern that ideally suggested for upside from anywhere from September 23rd to the 26th, and it could last into October 6th to the 11th before another leg down hits. So September 20th, anybody who was reading this knew that, okay, we should get some kind of bounce that's going to last from this time period to this time period. But once we get to this time period, you want to start looking on the short side because there's another leg down. So let's take a look here. And this was when the newsletter was put out on the 20th. Here's the 26th. You can see we were heading up. It wasn't any kind of breakout because that was not in the cards. We were just looking for some upside, and here is October 10th. So how did it all play out after that? So when it's here, most people, when we had this big move up, they were saying, all right, this is it, we're making that move up to the 2150, but it was 1010. So that's right in that area to be expecting some type of top to come in. So let's take a look at another chart. Here's the 10th. Now, all of a sudden, this pattern pops up, and we have a descending triangle. And this is where I had said, I put out that the email to say, listen, you could take a short trade right here because we're trading within this pattern, and you're just going to put a stop above here. So you were risking really 6 points on the S&P if it was wrong. And the reward, this pattern is looking for a 50 to 60 point drop. And you can see from here to here, it was already 40 points. And I took some profits because it's just the way this market has trained me to do. And when you get a big move like this, you take some profits and you wait for the next setup. So in our latest report, this was on today. Yesterday we had a 2% bullish reading, so that means that everybody was bearish yesterday after the move down. And what we're looking for is this pattern that the forecast remains for a low due on NDC. Why knowing when the low is so important, because you can turn around and if we go up tomorrow, buy in thinking that this is the low, and guess what? When we come back down again, you're going to be, you're not going to be in control of your emotions, and most likely you're going to make a bad trading decision and close your long trades right before we're about to head up again. So knowing when to expect this low, it's important, and it may not, we may just go down and it may be a double bottom or anything like that, but it's not safe to be buying until that date comes. And we could have a lot of chop, but it's once that date passes, that's when we're expecting the low. We're probably going to get some more very low sentiment readings, and then from there we're going to probably make a pretty decent rally from there. So let's take a look at some of the regular charts here, and again, this is that descending triangle. So we got short right here. We broke it. Looks like we came back and back tested the bottom of the wedge here. So if it heads down, it's going to make sense. But I wouldn't be too aggressive on the short side because we're going to get some bullish divergences, and you have to know when to expect a low. So it could go down a lot further than that. Once we start approaching the low time period, that's when I can start looking for when a low is actually going to hit. hit. But if we come down, I wouldn't get too aggressive because just on the technical end, we have some bullish divergences. So if they do bounce tomorrow, if they continue it up, this would just be your A, B, C of an A. This would be our wave B, and then I would anticipate that the wave C would come someplace up into the 2154. That would be a really great shorting opportunity if that happens. What makes things a little more difficult is if they open up tomorrow and we take these lows out, which is expected just because we know when the low date is supposed to be hitting. And then from there, I'd probably just step aside, let things let the dust settle, wait for our low date to come, and then start looking for a bottom to buy. And like I said, up here we were shorting. Down here, if we take out these lows, you want to just let it go and then look to buy. And we know that these are the types of moves that follow. So there's going to be a lot of money that is that comes, and that's really the best part about about knowing when to expect these turns. So I'm not sure what the special is. It's probably going to be in the email. But anybody who does sign up, you are going to get a free membership to marcuspath.com. That's my other website. I charge it's $79.99 a month. So it's a what is that? $960 value for free. And what I do is morning notes. I just give you an update on what I see playing out for the day. I trade you the trade alerts, and the one trade that we just made was fantastic because we were shorting at the 2170 and started taking profits down at the 2130 level. And we have a trading room. So anybody that joins Sentiment Timing, they get this for free. And that's really about all I have for tonight. We have to really just be patient, wait for that for the low time period to come, and start looking to buy. But everything in between there, you could be taking short positions at resistance. So with that, have a great night, and I will talk to you guys next week.